Good afternoon and welcome to BizTech's Asian Midday Market Watch. Jessica Amir, market strategist at Saxo Capital Markets, is our guest today. Now, Jessica, great to have you on the show.
Great to see you again, as always, Brian.
Now, Jessica, before we get your insights, let's take a quick look at how crypto markets are performing and also then whiz around regional stock markets. We'll start with Bitcoin, which is at 19,307.7. It's up 2.63%. Ethereum is at 1,353.51. It's up 3.67%. Now, looking at regional stock markets, we start with the Straits Times Index out of Singapore, which is up 0.43%. Bursa Malaysia is up 0.69%. Shanghai is up 0.42%. The ASX All Ordinaries is up 1.11%. The Nikkei is up 0.38%. The Hang Seng is up 1.33%. And rounding up the numbers, we've got the Kospi, which is up 0.66%. Jessica, it's a sea of green across the region. Tell us why.
Yeah, absolutely. Indeed. The mood was set on Wall Street overnight, and we saw equities bouncing quite strongly. This is despite bond yields peaking to some of their highest levels in about 15 years. But I guess the risk on tone was set because we had company news driving the markets higher. So Apple came out, for instance, saying that they're fixing a fault with their Apple 14 camera, and then you had Tesla coming out saying that they're increasing prices. So basically you had a bevy of new news. So the market is really looking past this huge red flag warning sign of peaking bond yields, and of course we've got the Fed's interest rate decision. So although we're risk on right now, we do urge caution because volatility is probably going to pick up. We're saying that volatility is really having an eye of the storm moment. So a bit risk on at the moment, but we do have limited trading. Of course, there's skeleton public holidays around the globe, some in part in recognition of the Queen's memorial service.
Now, Jessica, you alluded to the Fed rate decision, which we're all watching for. There's a lot of central bank action as well, which we've alluded to as well, which you mentioned. But really, a 75 basis point hike is pretty much baked in already. But there is, however, a 25% chance that it could go as high as 100 basis points. What's your view on this, and how will this impact markets?
Yeah, it's a really good question. And I think that's something that sophisticated traders are really toying with at the moment. So the market, as you said, has baked in the 0.75% hike, and there's a 25% chance of a 1% hike. However, this is really the capitulation moment that we've been speaking about for some time. So this will probably emulate a peak hawkishness from the Fed. And if we do see a surprise 1% jump in rates, we could possibly see the S&P 500 head back to new June lows or head back to June lows. So they're thinking there could be a hiccup, a fall in the order of about 3%. If the market breaks below a key support level, which would come as a huge surprise, then the S&P 500 could potentially fall away to the downside as much as 14%. Obviously, we're not saying that would happen in a day, but that's where the key next level of support is. So at the moment, we're very, very cautious if the Fed does be more aggressive than expected. So those key technical levels will be watched. However, on the flip side, as always, Brian, there's always green and gold on the screens, regardless of the indices perhaps being bearish if the Fed does hike more than expected on Wednesday. And of course, the green and gold today across the Asia Pacific was much the same as the US overnight. We were expecting more upside to come, and that's the energy space. So we're seeing some lithium stocks head higher and touch record territories today, and also coal stocks in the energy space. And that really goes back to the lack of supply in energy.
Now, speaking of green and gold and Australia's colors, for those of you who don't know that, RBA just came out with notes. Tell us about that and that impact on markets.
Yeah, so it was a bit of a ho-hum moment. I guess when you dive to the detail, the meat in the ham sandwich moment, I guess, or the falafel in the ham, the falafel in the bread, I guess, if you will, is that the RBA basically alluded to rates being high for longer. They said that Australian households are healthy, Australian budgets have been resilient, and saving rates are elevated because income levels are quite high, and that's buoyed by the Australian job market health. On the flip side, they alluded to higher prices picking up in fuel later this year, as well as retail prices also heading higher because businesses, as we know, across the globe and indeed Australia, are likely to pass on higher prices for consumer goods. And so this, I guess, is a bit of another warning sign, I guess, if you will, that inflation is not peaking, and that is a concern, I guess. However, the market really put that to one side, and the Aussie share market is running up strongly today. But this, I think, after the moves of the central banks, I stepped back and reflected on. I think that Aussie investors will be strongly reflecting on this, and this means that higher for longer rates, higher for longer inflation is probably going to be here to stay, and that means for investors probably backing those key beneficiaries of inflation will be a source for growth going ahead.
And what key beneficiaries, which sectors from an Australian context are going to be beneficiaries of this?
Yeah, I think across the globe, what we're really seeing in the energy crisis is one key standout this week is that the lithium price has hit an absolute record new all-time high. And that's after the lithium carbonate price has tripled over the past year. In fact, it's up 1,000% from the COVID low. So all in all, if you have a look at the key beneficiaries across the world's biggest lithium company, Albemarle, the second biggest SQM, they've been beneficiaries of this, and their shares are pushing to higher levels. And they're likely to continue to do so because we think that the lithium price is pretty much on a one-way street, really, because we're facing increasing demand from electric vehicle producers to scale up their EV manufacturing, while consumers are also demanding more EVs. So this means a higher lithium upside is ahead, and higher lithium earnings for those US names. Also, Brian, today in Australia, we saw Australia's biggest producer of lithium, Pilbara Minerals. Their shares hit a brand new record high. And we also saw another little known company called Core Lithium. They're actually in business with Tesla, and they came out announcing that they're going to probably announce a new deal or an extension to their Tesla agreement coming up. So lots of gains in the lithium space that we're expecting to be continued given the lack of supply in lithium. So a huge area to watch.
Jessica, thank you very much for taking your time to be on the show, and thanks for your insights.
Thank you so much, Brian. Have a great afternoon.
We've been speaking to Jessica Amir, market strategist at Saxo Capital Markets, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It will also be on our syndication partners, TV stations, radio stations, and websites. Thank you very much for tuning in.